So welcome. Today we are going to be talking about estimated tax payments. This is actually going to be broken up into two separate videos. This first one, I'm going to be going into what estimated taxes are, why you need to pay them, etc. And then next week, I will have a step-by-step process in which you can file your estimated taxes right online. Very easy. You can also use this to file any other IRS payments that you are needing to pay, whether it's an installment agreement, a balance due, or to set up an extension. But for now, let's just talk about estimated tax payments. The biggest thing about estimated tax payments is that now that you are a self-employed business owner, you are no longer having taxes withheld as you did when you were a W-2 employee. When you were a W-2 employee, you had Social Security and Medicare, the employee's portion, withheld from your paycheck. That equals about 7.65%. And also, you would have federal income tax withholding and possibly state with taxes as well. So that's why when you would get your paycheck, the gross amount and the net amount could have a big variation. Now that you are a self-employed business owner, you don't have that anymore. And another thing is that because you are a self-employed business owner, and if you are not an S corp where you are on payroll, you are not only having to pay the employee portion, the 7.65% for Medicare and Social Security, but you also have that matching amount for the employer. So that's 15.3% that you are paying just in self-employment taxes. Unfortunately, it is not a business deduction. So that's usually one of the reasons why if you are paying a lot in self-employment taxes, that's usually when I would talk to my clients about looking into the S corp where they can deduct those expenses. So if that's something important. What you would need to pay in the current year really depends on your prior tax year. If you are brand new to business, this is your very first year, and you owed no taxes last year at all, you can get by without having to pay estimated tax payments. You might want to consider that for you might want to consider putting money aside just in case so that you don't owe a lot, but you may not be required. If this is your second year and you owed in the prior year, the first thing you would want to do is to make those minimum payments if you can. So this way you're not going to get hit with that underpayment of estimated tax payments. $1,000 from your 2022 tax return, you can divide that into four, and then you have that minimum that you would want to pay each quarter. Now, a big thing to consider too is your trend. Are you going up? Maybe you didn't make that much in the beginning of the year, but as you are seeing throughout the year, your income is increasing. That is something where you might want to increase your estimated tax payments. And one of the things I'm going to show you today is a quick and easy calculation. You can definitely go with some of the IRS calculations, but this is something where you can just put in your gross receipts each month and it will calculate, and then you will have money that you can pay towards your estimated taxes or when you're paying your income taxes next year. Now, we want to talk about deadlines. So the very first deadline for estimated tax payment is April 15th. This is going to cover the first 3 months of the year. Second is June 15th. That only covers 2 months. September 15th, we have June, July, and August. And then finally, in January 15th of the following year, you're actually going to have it covering 4 months: September, October, November, and December. And I know that many pet groomers, their businesses, this is their real peak period. So you definitely want to keep track of what you are making so that you are don't find that you may not have that much income for the first 3 quarters, but this very last one you may have a real large amount. So you want to make sure to cover that. The question is often, what happens if you don't make estimated tax payments? Well, if you're required to make them and the IRS sees that you owe greater than $1,000, you're going to get hit with a underpayment of estimated tax payments when you file. And if you don't pay at least 100% in estimated payments of what you owed the prior year, then you may have that as well. And my biggest concern is that there are many small businesses that are not considering this and they wait until the following year to make this tax payment, but it gets too big. And when you're self-employed, a big issue too is you may look at your bank account and you may say, well, I don't have that much money in my account. I didn't make any. But chances are you had been taking withdrawals. So one of the things I usually suggest is, how much did you take in draws? And then you want to make sure that you are at least covering the taxes that you're going to have to pay on those drawers, because those are actually going to be subject to the self-employment tax and income tax, because they're not deductions. Not like when you are an S corp, you're an employee and you take a salary. Another important thing is that if for any reason you have a prior agreement with the IRS, it can be an installment agreement, another IRS payment plan, like an offer in compromise. If you are not keeping up with your current payments, they can actually terminate whatever agreement they have and they can demand full payment. And then it starts with a lot of ugly IRS letters. What are the penalties and interest? Well, for not paying the estimated taxes on time when required, you will see a penalty of 0.05% per month. Now, you're not going to really see this penalty until you actually do your tax return in the following year. But when you are looking at your 1040, what you're going to see is that for any taxes you owe, it's going to have the taxes and it's also going to show any kind of a penalty as well. And if you're not able to make those tax payments by April 15th of that tax year, you're not going to get hit with just the underpayment of estimated tax penalties. You're also going to be getting hit with failure to pay income taxes, because even if you get an extension, the extension is only for filing. It's not for paying taxes. If you do an extension, but you still will get hit with a failure to pay income taxes if not done by April 15th. And another big thing is that interest, as you have seen in 2023, has gone up. In prior years, it was like 3%, but as of December of 2023, it actually went up to 8% for the year. Hopefully that will go down in 2024. What we're going to be talking about here is how to actually start getting your tax payments made. And you actually have three options to do estimated tax payments. Online, which is my first suggestion always. It's the easiest, it's the fastest, and it's the safest. And that's what I'm going to be doing next week when I do the step-by-step. You can also do it via snail mail. You'll use the form 1040 ES. And then the things that you have to consider is the IRS's slowness of opening mail. I mean, that was definitely a case in 2020 and 2021. But if you are mailing your estimated tax payment close to the due date, they may not open it until after. And believe me, even if it's postmarked, chances are they're not going to look at the postmark and you'll get hit with a possible small penalty. And also, it is possible to make payments in certain retail stores with cash, but there's a limit of $500 for a payment. So either you would have to make a payment every month if you have a lot of taxes that you figure you have due, or you are going to be limited to that amount. And personally, I don't suggest that. Again, online is the best because once you file for the online and once you put in your information, right away you get a confirmation. You get a confirmation number, and you will see the amount come out of your checking account within a day or for whenever you scheduled it for. If you're not sure how to calculate your estimated tax payments, you can definitely do the complete calculation. It just pretty much requires that you are needing to have your profit and loss. And if you're not keeping up with bookkeeping throughout, you may not have the numbers that you need to calculate that out. And there are numerous videos to show you how to do that. So I'm not really going to get into that. But one of the things that I did put together was a spreadsheet that where all you need to do is each month you'll put in your gross receipts, and then it will calculate out the amount that you should either pay or at least put aside. Because my feeling is that you, especially in the beginning years, your income may not be regular, and you may also have expenses in one month that you may not have had the first, where you might need that. So if you calculate this out, put it into a separate savings account, you have it. And if you're able to make some estimated tax payments, great. If not, you have that there, and it will likely be greater than the amount that you would owe. And if you don't owe anything, you still have money in the savings account for yourself. This is just a sample. I'm going to go over this, but this is how my quick and easy calculation is going in. Because on my demonstration, I will be going into that just to show you how it automatically calculates. But as you can see, I have two columns here. Anything in green or blue, you're not going to touch. What you're going to do is you would just put in your gross amount over here, and then that would automatically calculate that. I have two columns because this one is pretty much for the federal, and this is where you're pretty much calculating to save about 15% of your gross. And then this one, it's just an additional 2% more towards any state income tax. Some of you may need it, some of you may not.
So this is the spreadsheet that I set up for my easy calculation for estimated tax payments. This is a good way for you to put money away, especially as this may be your first year, or maybe even possibly in prior years you did not owe that much, but this way you know you're putting money aside. It's as easy as looking at your profit and loss or your gross receipts by the end of the month, popping that into boxes. You don't want to touch anything else. They're already calculated out. So let's say that in January, you made 4,000 gross receipts. In February, you made $7,500 gross receipts. And then in March, maybe you made $3,500 in receipts. I'm just rounding up. So as you can see, it is calculating the amount. So this is 15% of your gross. And of course, you're going to have expenses that lower that. But if you at least put this aside, you're going to take care of making sure that you have at least the taxes to cover your self-employment tax, because that's the one that you really can't deduct as you can, like for a child tax credit or any credits like that. Any credits like that is really only applicable to income tax. So if you have that aside, you will at least be covered that way. And it's something where you can always up it, definitely. And if you're in a state with a higher, you can as well. I just did 2% as a safety. There are some states, of course, that are higher. So you can, that is something that you can always put a little bit more in. But at least if you have that in a savings account, come the end of March, beginning of April, when you're getting ready to see, should I make an estimated tax payment, you might want to do that. Because especially if you are having more in the account, you might even want to make a partial account. But because it is also a possibility, because you may be in your first year, you may have months that your expenses are really higher than your income, and then you may not have, you may not have the taxes during that time. So you don't necessarily have to make payments if you don't have the taxes. But if you have something in your savings account, it's something that you can use, worst comes to worst, when you need it. So I do have this on Google Sheets. If you are interested in getting a copy of this and you're in my Facebook group, please do me a favor and send me a PM and I can take care of this. I will need your email address. If you are watching this and you are not part of my group, but this is something that you would like to use, you can look within the description below and you will see my website, and you can go to the contacts and to contact me, and you can put in your name, your email, and that you are requesting the easy calculation, and I will send that to you within a couple of days. If you have any questions, please let me know.
Okay, so one of the things I do want to again remind you is to set your alarm, your calendar, whatever else. Next week on the 1/28/2024, I'm going to have my step-by-step demonstration. You'll be able to go through this and just put this date also in your record so that for each estimated tax date that's due, if you need to go back, you know where to find this particular video. Again, don't forget, if you like this video, please do that thumbs up, to share this with somebody that can use your assistance. They don't have to necessarily be a pet grooming business, because estimated taxes really affect all small businesses. If this has helped you, or if there's any other suggestions, please comment below. And if you can subscribe so that when I continue to do these videos, you will get notification. And don't forget to report your LLC or your corporation for the BOI reporting requirement. I will be attaching the video that I just completed on how you can file on your own.